What is cryptocurrency? Cryptocurrency is a form of digital or virtual currency that relies on cryptographic techniques for secure financial transactions, control the creation of new units, and ensure the integrity of the underlying technology. Here's a detailed overview. No central authority. Cryptocurrencies operate on decentralized networks, usually based on a technology called blockchain. This means there is no central authority, like a government or financial institution, controlling the currency. Blockchain technology. Transactions are recorded on a public ledger called the blockchain, which is a chain of blocks containing a list of transactions. Each block is linked to the previous one through cryptographic hashes, forming a secure and transparent transaction history. Secure transactions. Cryptography is fundamental to the security of cryptocurrencies. Public and private keys are used to facilitate secure transactions. The public key, known to others, acts as an address, while the private key, kept secret, is used to sign transactions and prove ownership. Mining and consensus mechanisms. Many cryptocurrencies use consensus mechanisms like proof of work or proof of stake to validate transactions and secure the network. Mining involves solving complex mathematical problems to add new blocks to the blockchain. Bitcoin, BTC. Introduced in 2009, Bitcoin is the first and most well-known cryptocurrency created by an unknown person or group using the pseudonym Satoshi Nakamoto. Ethereum, ETH. Launched in 2015, Ethereum goes beyond being a cryptocurrency. It's a platform for decentralized applications and smart contracts. Ripple, XRP. Designed for fast and low-cost international money transfers, Ripple focuses on facilitating transactions between financial institutions. Litecoin, LTC. Created in 2011, Litecoin is often considered a silver to Bitcoin's gold and is designed for faster transaction confirmations. Smart contracts. Ethereum popularized smart contracts, self-executing contracts with the terms written into code. These contracts automatically execute when predefined conditions are met. Tokenization. Cryptocurrencies enable the creation of tokens representing various assets like real estate, stocks, or ownership in a specific project. ICOs. ICOs were a fundraising method where new cryptocurrency projects sold their tokens to the public to raise capital. However, this method faced regulatory challenges. Decentralized finance, DeFi. DeFi is a recent trend involving the use of blockchain and cryptocurrency to recreate traditional financial services like lending, borrowing, and trading in a decentralized manner. Volatility. Cryptocurrency prices can be highly volatile, leading to potential financial risks for investors. Regulatory uncertainty, security concerns, and future developments are all factors shaping the world of cryptocurrencies. Governments worldwide are still figuring out how to regulate cryptocurrencies, leading to uncertainty about their legal status. While blockchain technology is considered secure, individual users must protect their private keys to prevent unauthorized access. Looking ahead, there are several key areas of focus for the cryptocurrency industry. Efforts are underway to address scalability issues in popular blockchains, allowing for more transactions per second. Projects are also working on interoperability solutions to enable communication between different blockchains. Additionally, some countries are exploring or developing their own digital currencies, known as central bank digital currencies, CBDCs, for potential integration with existing financial systems. Cryptocurrencies continue to evolve, with ongoing technological advancements, regulatory developments, and the exploration of new use cases. While the future of cryptocurrencies is dynamic and uncertain, they have undoubtedly introduced innovative concepts that are reshaping the financial landscape. Bitcoin, the first cryptocurrency, was created in 2009 by an unknown person or group using the pseudonym Satoshi Nakamoto. Since then, Bitcoin has experienced a remarkable journey, marked by significant price fluctuations, technological advancements, regulatory developments, and increasing mainstream adoption. In its early years, Bitcoin was introduced with the release of its white paper in 2009. The first block, known as the Genesis block, was mined on January 3, 2009. Bitcoin mining was relatively easy during this time, allowing early adopters to accumulate substantial amounts of the cryptocurrency. However, overall awareness and acceptance of Bitcoin were limited. Bitcoin's price experienced its first significant surge in 2013, reaching over $1,000 for the first time in November. This attracted widespread attention from the media and investors. However, the prominent Bitcoin exchange, Mt. Gox, suffered a severe security breach in 2014, resulting in the loss of hundreds of thousands of Bitcoins and a significant drop in Bitcoin's value. Following the Mt. Gox incident, Bitcoin's price gradually stabilized, and the market entered a period of consolidation. Developers also worked on enhancing the Bitcoin protocol during this time. The rise of Bitcoin is a testament to the transformative power of cryptocurrencies. From its humble beginnings to its current status as a global phenomenon, Bitcoin has paved the way for the development of numerous other cryptocurrencies and has forever changed the way we think about money and finance. Segregated witness, SegWit, was introduced to improve scalability, and discussions on further scalability solutions and improvements, like the Lightning Network, gained momentum. Price soars. Bitcoin experienced an unprecedented bull run in 2017, with its price reaching close to $20,000 in December. This surge was driven by increased institutional interest, growing awareness, and speculative trading. Mainstream adoption. The 2017 bull run brought Bitcoin into the mainstream consciousness. Traditional financial institutions started exploring blockchain technology, and Bitcoin futures trading was introduced on major exchanges. Market correction. After the peak in December 2017, Bitcoin faced a significant correction throughout 2018, along with the broader cryptocurrency market. Regulatory scrutiny. Governments and regulatory bodies around the world began to scrutinize cryptocurrencies, leading to discussions and initiatives to establish regulatory frameworks. Market recovery. Bitcoin's price gradually recovered in the following years. The market saw periods of growth and retracement, with Bitcoin becoming increasingly recognized as a store of value. Institutional interest. Institutional interest in Bitcoin grew, with companies and investment funds allocating a portion of their portfolios to the cryptocurrency. Notable institutions started publicly endorsing Bitcoin as a legitimate asset class. Price surge. Bitcoin experienced another remarkable bull run in 2021, reaching a new all-time high above $60,000 in April. This rally was fueled by continued institutional interest, corporate investments, and growing acceptance of Bitcoin as a hedge against inflation. Elon Musk and market impact. Tesla's announcement of a significant Bitcoin investment and Elon Musk's tweets about Bitcoin contributed to market volatility. Market corrections. Bitcoin's price has experienced periods of correction and consolidation, reflecting the inherent volatility of the cryptocurrency market. Maturing ecosystem. The cryptocurrency ecosystem continues to mature, with increased regulatory clarity, improved infrastructure, and growing integration of blockchain technology in various industries. The rise of Bitcoin has been characterized by a combination of technological innovation, market dynamics, regulatory developments, and changing perceptions of its role in the global financial system. As of my knowledge cutoff in January 2022, Bitcoin remains a dynamic and evolving asset, with its future trajectory subject to various factors, including regulatory decisions, technological advancements, and market sentiment. If someone had invested $100 in Bitcoin in 2010, the investment would have experienced significant growth by 2024. However, determining the exact value depends on the specific date of purchase, as Bitcoin's price can vary significantly throughout the year. In 2010, Bitcoin had a very low market price, often less than 10 cents per BTC. Let's assume a hypothetical purchase of Bitcoin at an average price of 10 cents per BTC in 2010. If you had bought 1,000 Bitcoins for $100 in 2010 at the price of 10 cents per BTC, then in 2024 it would have been $43,272,000 at the price of $43,217 per BTC at the time of the video release. So that would make you a millionaire. If you found this video helpful, give it a thumbs up and don't forget to subscribe to our channel for more insightful content. Thanks for watching.